Welcome to 𝐄𝐓𝐇𝐄𝐂. We talk about investing, finance, and professional development. As the current time of 4:41 p.m. on Eastern Time on July 25th on Monday. Hope you guys have a great weekend and also a good Monday so far. Ethereum coach at $1,526, about close to 5% so far. Respect over crypto market, beside Bitcoin, which is a lot more sturdy in comparisons to other coins, across the spectrum is down close to about 4.5% so far if you spread that all on average. On the equity side as well, we are also flat. I would say, across the board, a lot of the small cap stocks has been just sliding off the cliff across the spectrum today. Well, like the blue chip stocks, like the larger cap stocks are able to sustain relatively okay, and this is being reflected across basically all the indexes across the spectrum. Dow Jones, S&P, Nasdaq, and Russell all down or up about 0.5%. So basically, we haven't really moved if you look at it, holistically. But if you look specifically, you see that a lot of the small cap, high growth stocks were definitely, suffering today. And also the VIX is also up today, which is the volatility index up 1.5%, which makes sense as we are obviously shifting into second year Tuesday and the third year on Wednesday with respect to the FOMC meeting, right, which will depict what will be the outcome of the economy going forward. Are we going to be going with 50 basis point, 75 basis point, or going all the way to 1% on the interest rates to be fighting inflationary pressure head on? And collectively, what we've known so far, based on our, just observation from earnings on the corporate front, which has been kind of a mixed bag, among tech stocks to consumer-based stocks to obviously financial stocks, which all, is kind of mixed bag altogether. But if you look at the flavor around, the kind of the average of the, I guess, psychological sentiment or the synopsis of the collective outlook or wisdom among management team, I would say we are definitely, still teetering on the topic of recession. And as we are getting more information from another consumer giant, Walmart, it seems like with respect to the profit guidance that came out earlier today, it's definitely showing a slower growth going forward. Obviously, due to inflationary pressure, basically food and consumer product costs are going to be a lot more expensive compared to the past. So people are going to be, more conservative and more, I guess, reserved in terms of buying groceries the way that they were buying before. So which subsequently, it will hinder their profit, but also on the top line sales as well. So that's unfortunate, and those are all the signs collectively, indicating, what the outcome would ideally look like for the FOMC meeting tomorrow. And then I'm looking at other news as well. It seems like across the spectrum, there's some economists speaking out around like that. There's no way to kind of beat around the bush. I think they all kind of indicating that inflationary pressure is getting worse, and the rate hike, that we're going to be expecting coming up, combined with the monkeypox, combined with the COVID, combined with shortage around like truck drivers to pilots to etc. The economical imbalance, will ideally and logically drive more sell-off across the market going forward. I'm not sure what quantitative or qualitative analysis they've done there. As I'm reading into these articles, it's just basically right. I would say a lot of the needle drivers is really going to be contingent on the Feds, right? If we're going to be raising the rates to 1% or 75 basis point again, obviously those are gut wrenching reaction to the market. I'm just saying, like, if we go with the same rates again like we did last time, it's gonna be another ugly sell off that we've seen with respect to this red line, this red slide off, right? This staircase that we've had, and then we try to bounce a little bit, but this was mainly due to all the bank stocks that came out, right, with respect to a positive, top line revenue results. from an unhealthy reason, right? Because the reason that these banks were able to profit from, obviously, their top line is due to the fact that a lot of corporate companies are reluctant on borrowing more debt. So when they borrowing more debt on a higher interest rates, the banks will obviously take home a higher commission in comparison to more of a normalized market, right? So this green candle or this rebound in a bear market perspective is an unhealthy one. So everything that we kind of collectively have learned so far has not really depicted anything positive, right? So in the short term, my gut feel is that we should be seeing some more sell-off coming. And I think with respect to the signs that we're seeing right now, and again, I'm not a wizard and I'm not trying to predict the future, but I think the likelihood of us seeing another ugly rate hike coming up, right, would be more likely than seeing a green candle up and away from here. But ideally, right, based on what we see so far on the technical front, I'm just speaking on technical, let's just ignore all the news. Ideally, on a daily perspective, on a technical front, we should see some sell-off, right? But then weeks and months out as we normalize, which ideally after the FOMC meeting, we do have about like a month and a half of gap of separation, all the way until the next FOMC meeting in September. And also, we will see how the CPI report will look like in August, which typically, for August time period is a little bit more robust than other due to the fact, summertime. So hospitality, travel, leisure will ideally be some of the key drivers on the CPI report for August. So hopefully that will drive some buying pressure. We'll see, right? So again, with respect to FOMC meeting, ideally seeing some red pressure, I think that's healthy. I think it's logical. If we get some crazy rate hikes from Jerome Powell, we'll ideally see more deep type of sell-off, maybe even breaking 1,000 to reaching to a level of 850, 775, even 575, which is the next technical bottom, right? Which ideally that would be 65% off from the current level or 75% off from the current level, right? But the weeks and months out, again, I'm repeating myself, it should ideally form a golden cross and we should propel up from here, right? And monthly translates the same equation as well. And you could see that RSI is already bouncing. So with respect to Bitcoin is at 22,000 right now. You could see that, we're plateauing at the 42F70, crossing up. Weekly, about to form a golden cross as well. But the golden cross is not as robust compared to Ethereum, which translates that Ethereum will ideally surge higher in percentage in comparisons to Bitcoin, which makes sense. Daily is still negative, right? You need to kind of cross down. Ideally coming down to a level of support, which is 19,500 all the way to 17,500 from here. Again, but if we break 17,500, ideally we'll head down all the way down to 15,000 from here. Okay, and then across all the other coins are trading in relatively comparable fashion, right? Daily is negative, weekly, monthly are both positive from here. So I think it's just a test of patience for us, for us to ride through this, negativity going forward. And then as we recuperate from this negativity, we ideally should see some greens by the time we hit Q3 to Q4, obviously for the Santa Claus rally coming. So appreciate you. Have a good rest of the Monday. I'll check you guys on the next one. Take care.